Alright, in this video I'm going to try to describe the central elements on my charts that I'll look at for determining if I'm still on the right side of the trade or not. My stops and my stop and reverses are based on the information I'm getting ready to put on the screen here in front of you. And what I'm going to do is I'm just going to use a whiteboard to draw things out, and that way you can see the different elements live on the charts as they occur. So let's just go ahead and get started. I'm going to use, just going to break this up a little bit here. I'll do the best I can. Not a great drawer. But let's just say that this is the 1 minute chart over here on the left, and this is the 5 minute chart over here on the right. Okay. And let's just assume for a second, let's go start with the 5 minute chart. So let's assume for a second that we have a bearish 5 minute candle, right? Everything begins in everything revolves around this 5 minute candle, okay? So there's several things that happen. As you'll notice in the chat room, I draw a line here at the midpoint of the body of that previous candle. Okay, and I call that the heiken-ashi trend change line. And the reason I call that is because if price moves above that midpoint of that previous body, then instead of being a red candle, instead of being a closed red candle, it's going to be an open or hollow green candle. Okay, so it's going to be a change in color and structure up above that line. Okay, so that could be just a little bit. Okay. And then the next line that we would be watching would be the 5 minute half line. Okay. So when we look at that 5 minute candle, as we've often seen, price can come up and debate that 5 minute half line up in here. Sometimes it only gets up to the 5 minute heiken-ashi trend change line, or doesn't even get that far before price tumbles back down again. Okay. When it's a problem, okay, when it is a change of trend, then a couple things are going to happen. One is that green candle is going to keep moving up through this area, and you're going to have other candles moving up above that area. Okay. At the same time, you're going to have Chiku span on the 5 minute chart. It's going to start going through the historical price curve, and you're going to see it go above prices. You're going to start seeing it go above previous prices, right? So it breaks out. Another thing that you're going to see is on the 1 minute chart, if we were to draw those half heiken-ashi trend change lines and heiken-ashi fractal lines are going to show up on the 1 minute chart. These same lines are over here. So what's going to happen is if this 5 minute candle starts to turn green here at the heiken-ashi trend change line, then you're also going to have a green candle over here at that point. And at that point you have an immediate alert, because what you have is you have green on green. Whereas before you had bearish 1 minute candles and bearish 5 minute candles all kind of flowing together, right? Suddenly you have a change in color and structure, and now you have a challenge to these lines, but you also have green on green. As soon as you have green on green, you should be on the alert that this could be changing. Every trend change will begin this way. It will begin with a change in color and structure on those two candles. Now, whether it continues or not, whether it can push up through these areas, these black lines that I've got drawn here of possible resistance, remains to be seen. We don't know yet. But as soon as you have green on green, then the probabilities for the short begin to weaken. They become less probable that the price will continue lower, unless you get a resistance up in here, and then you get red candles coming back down, right? And then you're also going to have red candles coming back down here, and you're going to have red on red again. Now, during choppy price movement times, those you can have this fluctuate back and forth. So you don't want to just use color on color, but it's a pretty good guide to things. So your probabilities for a short would increase. The odds of being a successful short would increase as soon as you have the resistance in that level and you have red on red coming back down again. The probabilities for success as a short weaken as soon as you have green on green and you start to move above that 5-minute half line. So those are things to watch. So during that whole time, I'm also watching my check marks up here at the top. I've got two sets of check marks, right? And what's going to happen is the 1 minute, which is on the bottom, those 1 minute check marks are going to start to turn green. If this starts to occur here, you're going to see green check marks. Whereas before, you didn't. Okay? Before they were red when we were going down. If this 5-minute fractal, if this 5-minute heiken-ashi fractal line is violated, then these check marks on top, which are more indicative of the 1 and 5-minute charts, are also going to turn green. Okay? And you're going to have a series of green. And when all this becomes green, then you know for sure that you're probably late in your stop. If it gets to that point, you should be doing a stop and reverse, assuming a few other things, such as 26-minute half lines as the larger time frame area of possible resistance. Okay, so that's the initial thing that we'd be looking at. So the color of the candles, the 5-minute heiken-ashi trend change line, the 5-minute half line, and whether or not the 5-minute Chiku on the 5-minute chart is still below the historical price curve or not. That 5-minute Chiku is a little bit of a lagging indicator, but it's a clear signal, okay, that if that has moved above the historical price curve and you're still short, you're on the wrong side of the trade. Almost always. Okay, there are some exceptions. The temptation is that if you have lines overhead as possible resistance, the temptation is to want to ride this out, right? And then to add to that position at that next second tier area of resistance. But doing so means that you're trading in the wrong direction this whole time. Because in order for that to happen, you're going to have green on green. It's going to be like this. And this whole time you could have been making money on the long side, you're actually still short, hoping it works out. And if it doesn't stop at that second tier area of overhead resistance, then you're going to be cooked. Okay? So the critical area is right in this interim period where these things start to change. The check marks, which I just continually look at while I'm trading now, and it's an objective way to look at the charts and to make sure I'm on the right side of the trade. Another thing that you can watch on the 1 minute chart is the 35 period moving VWAP. So if this crosses back up, what you're going to see is that moving VWAP line is going to be seeing a crossover. We saw that today. For example, in the market, you're going to see it almost every day, where price is going to move above that 35 period moving VWAP line on the 1 minute chart. And when it does that, it's another warning sign that you're probably on the wrong side of the trade. Okay. Other things that you can watch for is we watch for those volatility stop dots. So for example, as you're moving down, you've got your volatility stop dots, and those are continuing lower. But then what happens, of course, down here, if you get this green on green, then you've already got, probably at that point, you've probably already got the VS3 dot converting over. The critical one, of course, is that VS2 dot, which is the last dot overhead. And if you have a breakthrough of that VS2 dot, for example, if in this area, if that's where the VS dots were at that point, and you get a push through that area, then again, warning, you're on the wrong side of the trade. Other things that you can watch, keep up with, are the CCA, which of course are going to be, the CCA is going to be down here going up like this. But when you see the CCB, which is just below that, also become bullish, it'll be green. And you see CCG, which is over here on this panel 4, which I'm not showing here. But when you see that, if you see both of these turning green, then, and the CCA is going to be green as well, then again, you know you're on the wrong side of the trade. So instead of just having a set stop in terms of a number of ticks or points, to me it's better to trade visually, as long as you pay attention to the visual. As long as you pay attention to all these different elements that I've got on the chart here. So to kind of go over them one by one, so first off, I'm not going to write it all out, but the first one that I would mention is that 5-minute half line that we talked about. The second one is going to be the 5-minute heiken-ashi trend change line. The third one is going to be the 5-minute chiku, that orange line that's on our 5-minute charts. The fourth thing I would mention is the color on color, like I talked about. Green on green, more bullish, higher probability of going long, especially if we've already moved above that 5-minute half line. Fifth thing would be the check marks, which we talked about up here in the top right corner of panel 4. Number 6 would be the 1-minute half line, which I didn't talk about, but as you'll notice, what happened down here, just like the 5-minute candle can have a change in color and structure and you can draw a line, you could actually draw a line on the 1 minute. I don't do it because it's very time consuming to do it live, but you can draw a line at the 1 minute half line. For example, let's say it's right here, and you know that if you have price moving through that 1 minute half line, again, you've probably got green on green going on and a reversal beginning to occur. The VS dot, which I also mentioned, VS dot 2 especially, number 2. Talked about the 35 moving VWAP and talked about CCB and A, which are both on panel 2, and then CCG, which is over here on panel 4. So that gives us 9 different elements that I've just covered. And what's going to happen is your probabilities for being in the right side of the trade are going to be determined by all these different colors and by all these different lines that are being crossed or not crossed. And that's the basis for the stop. And the reason I do those things, those visual signs, rather than just doing a physical stop on every single trade, is that volatility can change day to day. You know, you can't if you use a 30 tick stop, for example, on one day, the next day you could be right on the trade, but the volatility is so much higher that it wouldn't work. It wouldn't be accurate measure of risk. On this one, what you're doing is you're using color and you're using lines, you're using areas of support and resistance as ways to make sure that you know that you're on the right side of the trade. Now, the reason it's important to be on the right side of the trade, okay, even if it's a counter trend, let's say that on this one we moved up to the purple line and then we reversed. Well, still the right side of the trade was to be on that counter trend side, because that's the only side making money right now. If you're short and you're seeing green on green going up to the purple line, you're losing money, holding your breath, hoping it works out, and you're already on the wrong side of the trade. You already should have done a stop and reverse, if that's what you see. What you don't know is how far it's going to go, whether it's going to keep on going or whether it's going to hit its head and come back down. So you have to play whatever is currently happening on the chart. You don't anticipate, you don't try to predict so much as you trade whatever's happening on the chart, and just trade the charts instead of trying to predict it and whether you're right or wrong. Okay, just trade what's on the charts based on these different criteria I just mentioned. Alright, so 9 different variables there, if you can make sense out of all that mess. But hopefully that's interesting to you, and hopefully that'll help. Thanks.